And in our top business story, inflation in consumer prices over in Abu Dhabi rose to 2.7% year-on-year in the first half of the year, compared with the same period in 2015. The Statistics Centre Abu Dhabi revealed the results, adding that the Abu Dhabi inflation rate, as measured by the Consumer Prices Index, rose 0.3% in the second quarter of 2016 when compared with Q1. In June, the inflation rate reached 2.1% compared with the same month last year, while the CPI rose by 0.6%. It was noted that the rise in inflation in the first half of the year was mainly due to housing, water, electricity, gas and other fuel segments, which accounted for 84.9% of the rise, as prices shot up by 7.1%. The commodities and various services segment was the second largest contributor to the rise in inflation, as prices rose by 3.1% over H1. Mashreq Bank has reported a first-half net profit of 1.1 billion dirhams. That's compared to 1.3 billion in the same period last year. The bank said that net profit for the 3 months to the end of June dropped 16% year-on-year to 539 million dirhams, but up 1.4% quarter-on-quarter. Total operating income for H1 was 3.2 billion dirhams, up 5.1%, compared to 3 billion in the same period last year. Operating profit was up 9.4%, while net interest income from Islamic financing and interest earned on securities stood at 1.8 billion dirhams, up by 7% compared to H1 2015. Non-performing loans stood at 2.6 billion dirhams at the end of the quarter, giving the bank an NPL ratio of 3.5%. Mashreq's loans and advances rose 5.7% year-on-year to 61.7 million dirhams at the end of June, with customer deposits 2.6% lower at 73.3 million dirhams. The bank's chief executive, Abdulaziz Al Ghurair, stated that their focus remains on keeping a strong hand on expenses while allowing flexibility to take advantage of opportunities that present themselves over the remainder of the year and on into 2017. A new quarterly investment banking analysis report for the Middle East region by Thomson Reuters has revealed that regional mergers and acquisitions reached $18.7 billion in the first half of the year. According to estimates from Thomson Reuters, the figures are a decline of 29% compared to the first half of 2015 and the slowest first 6 months for deal-making in the region since 2014. Furthermore, Middle Eastern investment banking fees reached $416.8 million during the first half of the year, an 8% increase compared to fees recorded during H1 of 2015, and the strongest period for investment banking fees in the region since 2014. The report highlighted that Middle Eastern equity and equity-related issuance totaled $1.1 billion during the first half of the year, registering an 80% decline from the first half of 2015. Bolstered by a record-breaking second quarter, Middle Eastern debt issuance reached $32.9 billion during the first half of the year. That's a 45% increase compared to H1 last year, and the strongest first half for DCM issuance since records began back in 1980. Fees from completed M&A transactions totaled $104 million during the first half of 2016. That's a 24% decrease compared to a year ago and the slowest first half for M&A fees since 2012. Technology was the most active sector, accounting for 22% of Middle Eastern involvement M&A, and the largest deal was the $3.5 billion investment in US-based Uber Technologies by Saudi Arabia's Public Investment Fund. Emirates Airline has revealed plans to increase capacity on the Dubai-Milan route with a second daily A380 from the 1st of October this year. According to a statement, the move from a Boeing 777-300ER to the iconic double-decker represents a capacity increase of 1,834 seats per week between the two cities, enabling more A380 connections to and from key destinations in Australia, China, South Korea and Southeast Asia, with one stop in Dubai. The airline currently operates 3 daily services between Dubai and Milan, as well as a daily flight from Milan to New York JFK. It was also noted that last year, Emirates transported 22,000 tonnes of cargo from Milan, including cars, marble, food products like cheese and olive oil, pharmaceuticals, clothing and shoes bound for the UAE, India, Hong Kong, the USA, Australia and Mexico.